Good morning and welcome back to Almus Market Mornings. Markets have had a few events lately to focus on. The lawsuits has been filed by Governor Cook for her wrongful termination. There is the waning prospects of the Russia-Ukraine peace talks. US Q2 GDP showed an upbeat print. Governor Waller, in a speech, supported a 25 basis point cut in September. Plus, heading into the weekend in Asia, PM Modi is visiting Japan, post which he will attend the SCO summit alongside President Putin and President Xi. From a market point of view, traders are in a wait and watch mode. Generally, major asset classes have been in a range. Amidst all of this, there is a strong rally in Chinese stocks and Chinese currency. There is strong optimism over Chinese chip makers and the developments on AI that's keeping investors' confidence high. Offshore yuan strengthened to 7.12, a level seen around September or October last year, I think. Good morning, JK. What is your take on this rally in yuan? Do you think the weakness in the dollar, which seems to be persisting even against majors, can have some sort of a ripple effect in rupee?
Good morning, Swaraj. No, I don't think so. It'll have some impact on the rupee because of late we have seen that most of the positive developments in global markets have not helped the rupee because there's an overwhelming influence on the Indian markets by the tariffs, which has come into effect from 27th, in total 50%. And that's why we have seen even the Indian stock market has continued to slide. Yesterday also we saw quite a sizable loss in the major indices, despite the fact that global markets were stable to strong and US markets were hitting new highs. So the Chinese yuan strength is not, at least it's not percolating to the Indian currency, at least for not for now. And in fact, now the Indian rupee is at the weakest level against the Chinese yuan. So that's something that to be taken note of, and it continues to weaken. However, taking Chinese yuan independently, yes, it is really persistent. Strength that we have seen in the Chinese yuan for the last week or so. And the central bank fixing has been also a big influence on the market moving lower in the USD against Chinese yuan. You could see it in two ways. One is possibly there is some response from Chinese authorities to strengthen the yuan as part of their trade negotiations. The other way to look at it is that when the dollar index weakened throughout the last few months by over 10%, the Chinese yuan had underperformed and it had been stable in the range between 7.15 or rather 7.16 and 7.19. So it may be a catch-up trade that we are seeing. And of course, as you said, the big rally in the Chinese stock market has been also, attracting more fund flows into China, and so that's how I put it. Of course, now Chinese yuan also will await the developments in the US economy, particularly the inflation number that's going to be published today, and the employment report number that will be coming on 5th of September for August, which will be key for the next direction of the dollar. I will keep watching. Of course, as significantly, even today, the Chinese central bank has fixed the central rate lower, as part of their recent efforts. Overall, on the market yesterday, of course, we did see the US GDP number come higher than what the market had been anticipating, and this has been supported through better private investment as well as the consumption, which both of them marginally increased. And there was also an influence from higher exports, rather higher net exports, because the previous quarter had been, affected by front loading of imports ahead of the tariffs, and that means there were more imports, and that actually had a negative impact on the GDP for quarter one. That was minus 0.5%. Now it is at 3.3% for this year as per the second estimate, because the trade balance has shifted on the positive side, along with the fact that the private investment was better and consumption was also better. Now, more than this number, of course, we we are looking forward to a host of numbers today. The inflation number from Europe, and also the PCE number from the US. And PCE number, particular in focus would be on the core number, which there is an expectation that it will increase by 0.1%. But after the strong surprise in the PPI number, which you seen last month, this PCE number can also have an upside surprise in the number. So I think market would be very cautious. If that is so, then there will be a question mark about the September rate cut, which the market is currently discounting at 83%. So one should be prepared for a surprise. Even overall weakness in the stock, the currency can also have a stoppage ahead of the data. So we should this becomes a very important number. And of course, we also have the inflation number coming from the major countries in Europe, that is the Germany, Spain, and France, where of course the ECB is quite not clear about their future action. There is uncertainty about the ECB's action. The mixed data from Europe is not giving the comfort as well. So the market will be looking forward to the Eurozone inflation number as well. I think it's a wait and watch for the market. Dollar has actually been moving in a range, although at a lower level. So that should be resolved after tonight's data. And perhaps next week will be even more important as we head into the non-farm payroll. Last month it was a shocker, as not only did the number come lower, but also there was a downward revision to the previous month's number as well. So that becomes a very important point of attention for the market. So the dollar, I think it's sitting on hands, and the rupee not getting much help from any of the negative factors, because there is no indication of any progress as far as the the trade negotiations between India and US are concerned. So that will be keenly watched. The statement from Secretary Besant day before yesterday about at some point, we will come together. That's not, that was noted, but again, that is not really helping to see any progress. Meantime, reports indicate that their action, both from the corporate as well as the government is looking to support the export sector, while many companies, medium and small, they are looking to diversify their export destinations, and this is a process that will go on. This may be a sustained effort also to diversify the exports, even irrespective of the fact whether we get a relief on the 25% tariff, additional tariff or not. So India is in a unique place, unenviable, because we are going to get a negative impact either way. Even the data from US, even if it is weak, as we have seen in the recent past, it will only have a short-term impact on the rupee, and it continues to be suffering due to large demand on dips, and even as FIS continues to sell, and there are outflow from dollar on account of the FIS selling also. So looking ahead to the data, and of course, Indian GDP also is due to be released this today, Q2 GDP, after 7.4% that was recorded in Q1. This GDP is likely to come at 6.3%. The impact of the front loading of exports ahead of tariff was one of the factors in the previous quarter, and that can be slightly less influential in this quarter. So that's the reason why we are looking at a lower number. Our GDP being a backward-looking data, and we have so many ongoing factors like tariffs and higher tariff and the U.S. monetary policy. So that will be less of an GDP number will be less of an influence than the ongoing data that we are looking forward to. So all said and done, it's going to be probably a very busy Friday for the markets. Thank you.
Thank you, Jackie, and lot to look forward to when it comes to events. Of course, inflation numbers from Europe and PCE from US. And PC would be closely watched, especially after the surprise we saw in the PPI numbers. And that if let's say the PCE is coming much hotter than what markets are expecting, that will be a cause of concern and sort of confuse the markets more on the Fed path. And of course, the labor market data that comes out in the early September, that would also be closely watched. India's Q2 GDP is also likely to be released today. That's something to watch out for. Yuan is showing persistent strength. The fixing has also been a major factor. Now, whether there is some linkage between the ongoing trade negotiation and yuan strength, or it's because of the strong rally in stocks, I think we'll get to know that also uh, when things get clearer. That's it from us today. Thanks for listening. Have a good weekend. We'll catch up on Monday with the fresh round of updates.